What do you know about Black Tuesday? Have you heard of the Great Depression? Do you know how these two events are connected? If not, today is your chance to find out. We'll look at what led to one of the worst economic crises in history, how it affected the lives of millions of people, and what lessons we can learn from this tragedy. So get ready, we're diving into Black Tuesday in 1929. What do you know about Black Tuesday? Have you heard of the Great Depression? Do you know how these two events are connected? If not, today is your chance to find out. We will look at what led to one of the worst economic crises in history, how it affected the lives of millions of people, and what lessons we can learn from this tragedy. So get ready, we are starting to dive into Black Tuesday of 1929, economic boom. The post-war years, 1920s, in the United States were characterized by significant economic growth. The introduction of new technologies, cars, radio, electrical appliances, the development of industry and the growth of consumer demand created the illusion of general prosperity. The cult of shares. The stock market became extremely popular. People who did not have much money began to invest money in shares, seeing this as an easy way to get rich. This was fueled by optimistic forecasts and promises of quick profits. Margin trading. A key factor that accelerated the growth of the market was margin trading, buying shares on credit. Investors could buy shares by paying only a small portion of their value, say 10%, and borrow the rest from a broker. This allowed for huge profits if the shares went up, but also carried huge risks if they fell. Speculation. The trust economy entered a stage of unbridled speculation. Stock prices were detached from the real value of companies. People bought shares not because they believed in their long-term potential, but because they expected to quickly resell them at a higher price. Cracks in the economy. Despite the apparent prosperity, the U.S. economy had serious problems. Overproduction in agriculture. Farmers suffered from low prices due to an oversupply of products. Uneven distribution of income. Wealth was concentrated in the hands of a small group of people. Oversupply of durable goods. People were sated with buying cars, radios, etc., which led to a slowdown in demand growth. Developments, crash week, October 1929. First signs. In early October, the market began to show signs of instability. Some stock prices began to fall. Black Friday, October 24th. Panic began in the market. Investors began to sell stocks en masse to lock in profits or avoid losses. Trading volume reached a record high. Attempts to stabilize. A group of influential bankers, led by J.P. Morgan Jr., tried to calm the market by buying up stocks. This temporarily stopped the decline, but could not change the situation fundamentally. Black Monday, October 28th. The decline resumed with renewed vigor. Investors realized that the market was overvalued and that the bubble had burst. Black Tuesday, October 29th. The most disastrous day in stock market history. Trading volume reached unprecedented levels, with over 16 million shares traded. Prices collapsed. Many stocks were worth virtually nothing. Investors who had bought stocks on credit found themselves bankrupt. Further decline. The market continued to decline for several years. By 1932, the Dow Jones Industrial Average had fallen 89% from its 1929 peak. Aftermath. The Great Depression begins collapse of the banking system. The banks that had issued loans to buy stocks went bankrupt. People lost their savings stored in banks. This led to a banking panic and mass bank closures. Decline in production. Companies faced a sharp drop in demand for their products. Many factories closed, leading to mass layoffs. Rise in unemployment. Unemployment reached unprecedented levels, reaching 25% in 1933. Millions of people were left without work and means of support. Poverty and hunger. People lived in slums, Hoovervilles, stood in lines for free food. Hunger and disease became common. Social protests. Unemployed and hungry people staged demonstrations and protests. Global economic crisis. The Great Depression quickly spread throughout the world, causing economic recession in Europe, Latin America, and other regions. Key factors leading to Black Tuesday. speculation and bubble in the stock market, margin trading, buying stocks on credit, insufficient regulation of financial markets, structural problems in the U.S. economy, overproduction in agriculture, uneven distribution of income, psychological factor, panic and herd mentality, meaning of Black Tuesday. Black Tuesday became a symbol of the collapse of the American dream and marked the beginning of the most severe economic crisis in the history of the United States. It forced a reconsideration of the role of the state in the economy and led to the introduction of stricter regulation of financial markets. The Great Depression had a huge impact on the political, social, and cultural life of the U.S. and the world. The story of Black Tuesday is not just a tale of the distant past. It is a reminder that economic crises can happen at any time and that we must be prepared for them. Greed, speculation, lack of regulation, all of these can lead to catastrophic consequences. It is important to learn from history so as not to repeat the mistakes of the past. After all, knowledge is our best defense against future shocks. Thanks for watching. I hope you found this video useful and informative. Don't forget to share your thoughts in the comments. See you in the next video.